Corporation as the best S&T park, as well as technological business incubator in the country by the Department of Science and Technology, Government of India in 2002. PSD STEP, under his leadership, assisted more than 80 technological ventures. He is a BTech graduate from IIT Madras, MBA from IIM Bangalore, and PhD in Management Studies from University of Hyderabad. He has also been an active member as well as a convener of Industry Institute Interaction, IT, SME, and Innovation panels of CII, and the chairman of CoimbatorET.com, a CII-led initiative to promote the city as a preferred IT destination and a member of CII's Digital Transformation Panel. He has delivered talks in various national, international, and UN forums. He is a mentor and advisor of Network of Indian Agriculture Business Incubators and Forum for Agriculture Research of Africa and African Agribusiness Incubators Network. Dr. Raghavendra Prasad has served as visiting faculty at Loyola Institute of Business Administration, Chennai, Hyderabad Central University, and PSD Institute of Management, Coimbatore. He was also a member of the National Advisory Committee on Science and Technology, a member of the Advisory Board of eDairy, promoted by Dwara for digital transformation of dairy industry and many technological business incubators. He advises PwC on World Bank funded agri-development initiatives in the state of Himachal Pradesh, India. He is also mentoring many startups in the agri sector, especially agri value chain, deep technology, and logistics domain. He is an avid reader, writer, startup mentor, traveler, and a bridge player. He has also presented and published papers and articles in various international and UN conferences and journals. Sir, we welcome you. Thank you so much.
Thank you. Very good evening to all of you. Today I'm going to talk about blockchain and allied technologies and how it is useful, especially in the in business, primarily with focus on financial services sector, banking and financial services sector. Am I audible? Hello, am I audible?
Yes, audible.
Okay, yeah. Before I get into blockchain technology in detail and walk you through what exactly it's all about and what are the use cases in banking financial services and why it has got such a strong value proposition, I would like to briefly tell you the origin of this blockchain. When Einstein was a professor in German university, he had set a question paper, and his secretary was to type it out. He said, Albert, the question paper is the same as the last year. He said, yes, question paper is the same, but the answers are different this year. Because such was the advances which are happening in quantum physics in those days. With scientists like Fermi, Oppenheimer, Heisenberg, so many other people working on this quantum physics. There was development almost happening every day. And it was a very dynamic field. So the answers kept changing. Similarly, if you look at business, the questions are always the same. How do you improve competitiveness? How do you do your business better and in a more cost-effective manner? How do you get more customers? How do you reduce my cost? The challenges for business are always the same, but the answers keep changing, right? Answers are not the same every year. So how do you constantly innovate and keep up and keep delivering more value to your customer, keep reducing the cost? The solutions keep changing. And one of the recent solutions that had recently been used very increasingly is blockchain technology, which is what I'm going to talk about during the next 45 minutes or so, right? Let me just share my screen. Are you able to see my screen?
Yes, sir.
Yeah? Is it better now?
Yes, sir.
Hello?
Clear, sir. Clear, sir.
Okay. See, in its essence or in the basics, what exactly is blockchain? It's a peer-to-peer distributed ledger technology. When you say distributed ledger technology, all the people who are in the ecosystem are the nodes, and they have the copy of the entire transaction list in encrypted manner, so that no single person will be able to alter any of the transactions. These transactions are what are called immutable. No individual, particular individual, one individual can change it. And if anybody changes it, it becomes a new record, which is need to be approved by all the stakeholders in the ecosystem. That is a simple and beautiful and elegant system. That is what is created such a major wave in the financial services sector and in other areas also. It's a peer-to-peer distributed ledger technology. So everybody has a copy of the ledger, so that there's no single owner, and it's the ecosystem managed. So there is trust amongst all the people who are there, and there is accountability, and there is, of course, totally trust and transparency built into the system, right? So there are two main elements to blockchain. It's a business network or an ecosystem in which members can exchange value, whether it's a Bitcoin or any of the assets or the information through a ledger. And each member will possess a copy of the ledger, and it will be with consent and always synchronized with each other. So all the ledgers will have the same set of values, so that it's no single person can go and alter any of those records in the ledger. See, what is how the current architecture of most of the business solutions is, and how this blockchain is vastly different, is what is explained here. In a centralized business network, it's a very chaotic and unsecure network, because each party will maintain its own database, and the communication will be through electronic data interface, or through email, fax, phone, etc. Or if it is two disparate systems, they will talk to each other through what are called application program interfaces or APIs. That's how the two systems will have to be integrated. There are multiple stakeholders and who are using different systems. All the systems need to be integrated, which is a very tremendous Herculean task. Whereas in blockchain, they all communicate through this common interface, and it becomes a complete ecosystem which is transparent, and transactions will be instantaneous. So network is unified by one single common ledger, and what is contract to what are called smart contracts. What is smart contract? Hello? There's one hand going up. Yes, please. Hello? Hello?
Yes, sir.
Yeah, please ask a question. Hello? Is there any question or something? Hello? Okay. See,
sorry to interrupt. Maybe if you have any questions, you can post it in the chat box, or we can have at the end of the session. The student coordinators will be reading out the questions if you put it in the chat box. Thank you.
Yeah, okay. So there is one single ledger which is shared by all the people, whether it is, in a banking, there is a sender, there's a receiver, there's an intermediary, all of them share the copy of the ledger. So there is one single set of truth with which all the people are sharing information. And the smart contract is nothing but, if the asset is transferred, you make the payment. Certain conditions are fulfilled, then certain action needs to be triggered. That is called a smart contract. That can be programmatically written, and that smart contract can be triggered. For example, if the vendor has to supply 100 components to a company, and the company has received the 100 components, the quality department has checked the 100 components, they've accepted it, then they're taking it into production. Automatically, that there's a goods receipt note and the quality report that will go into the smart contract. Once they've accepted, then automatically the payment will become due. That's called smart contract. If it is accepted, then automatically the payment mechanism should get triggered. Or the payment is, say, 15 days later, the payment mechanism should get triggered. So it's a simplified reconciliation. On a real-time basis, you can reconcile all the accounts. There is improved regulatory reporting, for example. There are a lot of statutory compliances. As soon as the money is received, automatically the GST or whatever has to be paid will be paid. Tax deduction source also will be triggered, and that will be paid. So it improves regulatory compliances and reporting, and it reduces all the counterparty risks. When you transact with somebody, there are risks associated. All those risks are minimized, and it creates a perfect win-win platform. That is the beauty of this technology called blockchain, right? See, how exactly does this blockchain technology work? Each transaction is gathered into blocks. So multiple transactions become a block, and the blocks are cryptographically chained together in chronological order, encrypted and chained together. And then it's broadcast across all the people. And once it is approved by all the people in the ecosystem, automatically the ledger is shared by everybody and accessed by different servers. And depending on the need and the entitlement, each person can see what is relevant to that person, right? That is the beauty of this technology, how it is different from the conventional database-based systems. So this is, how the technology is. There's a distributed ledger technology, which I talked about. Smart contract, when certain business terms are achieved, automatically the transaction process can get triggered. All the parties involved validate the transaction, and it also ensures privacy when so that you are entitled to see what only you are entitled to or you're eligible to see, right? So it's a ecosystem-based IT information system. So there's a participation from all the stakeholders. The cost is lower and increased efficiency of communication because it happens on a real-time basis. That's how it's very useful in financial services. Typically, the Gartner report says the value which is unlocked by blockchain by 2025 is expected to be of the order of $176 billion, and capital savings that can be accrued because of financial services transaction being done more effectively could be of the order of $35 billion. So it basically streamlines process through smart contract, reduces all the complexity which is there in the business. So if 100 components are supplied, for example, only 95 are accepted. So there should be, communication between the vendor and the company, a lot of communications back and forth. Today, all that is reduced because 95 acceptance and 5 rejection with all the dimensional report, etc., form the part of the contract. So each entity, can upload whatever is relevant from their side, and it is shared, and reconciliation is done on a real-time basis, right? So it leads to faster dealings and reconciliations and clearances. And therefore, it eliminates all the costs associated in communication and untrusted transactions, etc. What are the positive indicators when blockchain system is useful? When there are multiple stakeholders, not necessarily within one company, but across multiple companies, there are many stakeholders involved. For example, in financial transaction, you might be using ICICI Bank, and you will be sending your friend money who has got an account in HDFC Bank, and there are multiple players involved in the complete ecosystem. So when this kind of situation is there, then blockchain becomes an ideal use case. Managing contractual relationships. There are, once the money is transferred from X, then it should be credited to Y. So this kind of contractual relationships are better managed using blockchain. Complex business logics can be handled through smart contracts, which I explained already. Identity is important in, who is the person who is doing the transaction. All that can be, and the identity is also managed very easily. Transactions need to be private. Identity is known, transaction can be private. And market approach is needed, and it reduces cost tremendously. Where is blockchain not applicable? When the when there are very high volumes and volumes of transaction, varieties of transaction, then blockchain is not the ideal situation to use, because there are other technologies, streaming technologies, which are probably better. Now, though, blockchain systems are also getting capable of handling much more higher volumes of data in an easier manner. And there is when there is only one organization involved, for example, there's production, there is a purchase department, the finance department, HR department, etc. Then you don't need, because all the parties trust each other. So there is this system is probably not required. A simple common database system, which is like an SAP, Oracle, that kind of a system would be adequate. And it's not a replacement for a database. While it has its own database, it's not a database system alone. And it's not an ERP. This is very important. It doesn't eliminate any of your existing systems, but it works with the existing systems that you have got and makes the transactions trusted, transparent, and facilitates inter-party transactions, right? What are the popular blockchains? I'm sure many of you would have heard of these. Ethereum is one of the most popular and the first blockchains. It's a general purpose blockchain, and the currency that they use is Ether. Cryptocurrency they use is Ether. And there's a concept called mining, where those who approve the consensus network. Consensus means any transaction approval happens through a process called mining, where there are a lot of miners who do the mining, that is approving the transaction by solving a puzzle, right? By solving some cryptographic puzzle, and they get a reward for that. They're called miners. Then network can be even both public or private network. The difference is the public network, public blockchain, the party's identity is not important. Whether the money transfer, whether the money is real, that is more important. A is giving money to B. Whether the money is real is more important. The proof of work, we call it. That is more important. The individual's KYC is done before the person enters the system, right? So privacy is an open privacy. Whereas in a public blockchain, you need to know the person who is. Private blockchain is, for example, between companies and vendors, etc. It's called a private blockchain. So there, the identity is very important. The persons who are not part of the ecosystem should not get into our system. So it's a private blockchain. So there you don't have that complexity of proof of work, which is all shared across multiple stakeholders, right? So I'm sure you have Bitcoin. This is a very evolving field. R3 Corda is one of the latest, where the computing power required is much less. The hardware and server requirements are much less. So it can again be private or public. So this is a continuous evolution which is happening now. There are many more systems which are coming into play, but these are the 5 popular systems currently which are involved. We work on, we don't deal in cryptocurrency, right? Because the currencies are under regulation. These are not meant for, the Reserve Bank of India Indian government has reservations against these cryptocurrencies, rightly so, because they are not backed by any sovereign guarantee. Whereas an Indian rupee is backed by Indian government, dollar is backed by US government. So we don't deal in cryptocurrency because they are not backed by any asset or any sovereign guarantee. It is a currency created by a group of people who themselves trade in the particular currency. So it's a private currency exchange, you can say. So we don't get into the cryptocurrency at all, because the value of the currency is not determined by a market force in the typical or the trade balance and so many other factors with which currencies are valued. So this is a very restricted market. So we don't, as a company, we are not into cryptocurrency. We use this blockchain platform as a powerful technology platform to build applications for enterprises, whether it is in financial domain or telecom domain, or say your university certificates. Supposing I say I'm from IIT Madras, this should be authorized by IIT Madras and this should be available as a public record. So my certificate is authorized and it's available for anybody to view. Similarly, my work experience. So this kind of credibility, trust, which element I was talking about, that can be enhanced. So for that, these kind of blockchains could be really useful. So we work on those kind of enterprise applications, which are not built around cryptocurrency, right? But I will still give a brief view about cryptocurrency, because that's something which you are all curious about. It's an internet currency. It's decentralized. It's not monitored by any central bank, any other central banks. It is between individuals and businesses for transfer of value between individuals and businesses. And the currency has no asset backing. It is based purely on the people who are there, their supply, and within that ecosystem, the supply and demand. And there's a certain limit which they have set for the total currency that can be made available as Bitcoin. So this valuation is a very strange valuation. I will not get into how the value of the Bitcoin is arrived and whether it is realistic, because these are all speculative instruments, and this is not something that you should be bothered about. There will be country-backed digital currencies which will be coming into picture, which will use the same technology, but it will be like a digital currency. Instead of rupee, which is there in the physical form, it will be in the digital form, right? But that will be a sovereign currency. Like in any other rupee notes, if you see the Reserve Bank of India governor's signature is there, he promises to pay the bearer the amount equivalent to whatever is the currency value, right? That is called sovereign guarantee. But any other cryptocurrencies do not have the sovereign guarantee as of now, including Bitcoin. Why the Bitcoin came up? Because people had they didn't trust the financial institutions. They said they are making too much money. The cost of transaction. Supposing I want to change rupee into dollar and want to buy something in dollar. One, there's a cost of conversion. Then there's a transaction. Everywhere there is cost involved. So people said, why should there be? There should be uniform currency across the globe. That was the premise or the conviction with which they started this currency. And there are takers. There are people who are using this Bitcoin. There are many consumer durable companies and FMCG companies which are also accepting this Bitcoin. But as I told you, it has no legal sanctity as of now. And it addresses two of the most important concerns which are associated with any digital currency. That is the transaction security. So here, whatever I send to you, it should be deduct my account, it should credit your account. That transaction security has to be there. That has been addressed using this technology, as I told you, what I explained, the underlying technology. And double spends. Supposing, I have a digital currency, I can't pay the same currency twice and buy certain goods and services, right? So the double spends are avoided because, each currency is unique, it is encrypted. So it is a one-use currency. So automatically, it avoids double spends on the currency using the technology platform. And it is very secure. That is the beauty of blockchain, because there's a long computer accepts the longest blockchain, and you got to hack all the people who have got the distributed ledger and hack all of them simultaneously to be able to do any fraud, which is like impossible. Not even 1 in a billion chance of doing that is there. That's why it's a very secure way of doing business or transaction. And also, when it is not being transacted, when it is with you, it should be tamper-proof. Nobody should be able to say like a credit card or your debit card or whatever other cards which are there. They will be able to break into your system and steal your wallet. So that security is beautifully built in with cryptography, public key, private key, etc. The technology element that is there behind cryptocurrency. So how the transaction is indicated and broadcast is using digital signatures, which is your 64-digit signature, which cannot again be, the combination is alphanumeric with so many other variables. So it will be impossible to replicate that signature. And there are public and private keys for transacting. And validation of the transaction, as I told you, is done through a consensus mechanism. And once it is done, it is hashed and stored. So when it is hashed and stored, nobody can, the hash function ensures that, it's chained to the block and it is recorded for posterity and nobody can tamper with whatever has been transacted, right? Each transaction is packaged and recorded in the order in which, chronological order in which it was carried out, right? It's a community built record, so everybody has a copy of the record or the proof of work. So no single person can be hacked to break open the currency or break the mobile wallet. Bitcoins, they get created when they are mined, when there's a problem which is solved, and while doing the consensus, that creates solving that math problem using high computational power. That every time when it's done, that creates a Bitcoin, and it allows them to create that block. Every time that block gets created, and each new block is getting added to the blockchain. Miners are rewarded with Bitcoin whenever they mine, right? So you've got to do a lot of work to earn Bitcoin if you're a miner. But the concept of mining is slowly going away. The currency, because it's too very high in terms of computational power, the cost of Bitcoin, because of the mining effort involved, is getting to be very high. So, and it is not eco-friendly because there's so much of power which is used, so much of computational capability is used. So there are negative arguments against Bitcoin, which I also feel. I think mining Bitcoins and mining and all that, this kind of currencies, this kind of a thing is not sustainable. Now I come to the most important use cases, how the government can use identity and personal records. Your birth certificate, marriage licenses, all the demographic records can be stored in a very secure manner, right? And anybody can access it, and it's tamper-proof. So there is no, my degree can't be photoshopped and used by somebody else. They can always go back and check. And whether this corresponds to the IIT is validating my degree or not. Everything is there. IIT is approved. The transaction can be accessed and seen, and its IIT approved degree is there. So like that, it's all the KYCs are done. It's a very ideal solution for KYC. It's very good for supply chain management and inventory, for tracking of assets from creation. Who owned the asset? For example, today, land records are in a mess in India. How do you track the land record? When it is written in an immutable record, this person owned the land initially, then it was transacted between X and Y. Today, anybody can create a document and go and register a document, but all that is not possible. When the ownership is clear, the transactions are recorded, anybody can access and see the history of transactions, and who is the present owner is very clear. So these kind of fraudulent transactions and KYC frauds can be avoided very nicely using blockchain technology. Similarly, as I told you, using smart contracts, you can track the fulfillment of the contract, payment, etc., and purchases and schedule monitoring. And when they ship the goods, for example, there are quality tests to be done. The quality reports also go into the blockchain. So later on, when there is a dispute, you can go back to the quality report and check, because quality report is uploaded by the vendor, approved by the company which is buying it. So they've all agreed that this is the quality parameter of the goods supplied. So whether it is in tune with what was required and any deviation is there or not, all that gets into the blockchain. Similarly, voting, digital voting. This is going to be the future of EVM, electronic voting machines, where, for example, your KYC is done and your crypto vote gets generated and your candidates come up, who are the candidates in your constituency. And this crypto vote could be valid for, say, 10 seconds. You go and assign it to the candidate you want to vote. Automatically, the system will take it and increment the candidate's vote by 1. Here, who voted for whom will be kept confidential. But the one vote has come into this party, that can be incremented by 1. And as soon as the election is over, from the centralized system, or for any other decentralized system, through the nodes, you'll be able to give out the result, which is the copy of which is available to everybody. Everybody can check how many votes has been polled for which party, and it's very secure. No fake votes is possible because the KYC and crypto vote and whom they voted, there's a complete tally of all the records. So what we call VBPAT, voter verifiable trail, all that is automatic, inbuilt in a blockchain-based system when you have the electronic voting. So this is going to be the future of even voting. So civil registry, person's life, birth, marriage, death, etc. It's a very useful tool. When the birth was recorded, nobody can go and tamper with it later. So all tamper-proof records for eternity. Similarly, land registry, I already told you. Similarly, motor vehicles. Today, there are so many frauds happening in the motor vehicle. All that can be eliminated. When it was bought, who bought it, when it was registered, then who sold it to whom, when was licenses paid, the history of the vehicle as it went for, say, insurance claims, etc. All that can also be tracked using the blockchain, right? This is one of the use cases which has been done. Before that, citizen arcane registration, very old registration process, how it has been brought down using smart contracts and blockchain system, so that you can get any of your services, the government to citizen services can be delivered within a matter of minutes, right? From the centralized system where records are at risk, it can be de-risked and complete transparency and trust can be built in, and it can be digitized, and all the government services records can be given to citizens who want it, whether it is municipal tax, land documents, birth, death certificates, all the things that are required for a common man. Similarly, population register, health register, vehicle register, these are all already happening. One of the countries which has adopted this fully is your Estonia. Estonia is entire, even legal cases, the banking transactions, telecom, KYC to all the calls made, everything is on blockchain. Similarly, energy companies. The person who has generated the energy, the person who has consumed the energy, there could be disputes. You'll say, I have supplied you so many million units of power, but you're not taken it, you're not evacuated, that's your problem. So all this kind of disputes arise in typically energy related transactions. So all that are in oil, what is the quality of the oil, what is the quantity of the oil, what is the sulfur content, all that when it is on the blockchain and both the seller and the buyer accept it, all that goes into the blockchain. Most of the legal disputes and other problems which occur later due to the quality, etc., can be tracked. It becomes very easy for the buyer and the seller to have a very meaningful argument to sort out the problems or address challenges which they come together face, right? Financial services use cases typically are cross-border payments, that is global, from one country to another, one continent to another. Corporate bonds. Today, corporate bonds, if you know how they pay the coupon rate or the interest rate on the bonds is on a cutoff date. Whoever is holding the bond, he gets to pay gets the dividend or the interest. But instead, here in blockchain, you can track who was holding it for how many days, when it was sold. Each transaction is recorded, so you can pay pro rata for the duration held, duration of the bond held. You can pay to the people who are there. Similarly, collateral management. Supposing I have a house, I want to give it as a collateral, or any property, any movable or immovable property, where it is now, have I mortgaged it again? All those all the frauds and misgovernance can be eliminated through this. Similarly, project funding, where the milestone is achieved, that can be tracked. For example, in vaccination, you can, another use case for vaccination is, for example, if you have the Pfizer or Covishield or Covaxin, then they have to maintain at some certain temperature right through the chain, right? Whether it is deviated or not, it's the supplier's word versus your word. Instead, if there is a sensor which is there, which can transmit the temperature data on a periodic basis in the box, the cotton in which the vaccines are there. If it can be recorded and it can be transmitted, and this data is available, and anybody who is getting administered the vaccine would be able to access the number on the box and would be able to track whether the temperature has been maintained right through. So you know that the vaccination you are taking is effective. Does not. It has been able to maintain the integrity right through the cold chain. So these are some of the use cases which can be done. Similarly, not necessarily for vaccination alone. It can be even for organs. It can be for even vegetables, etc. And project funding milestone, whether they have been achieved the milestone, and in fact, supposing there's a project in which you got to help so many self-help groups with some deliverable. Multiple tier tracking is possible, whether the self-help groups have been provided the money, and whether they have been able to create the kind of whatever targets they were supposed to achieve or whatever deliverable they were supposed to meet, whether they have been done. All that can be easily tracked using blockchain, so that no individual owns the data. Everybody can have a check and balance built in, so that meaningful dialogue and fraud can be eliminated. Governance can be significantly improved. In fact, Dubai government is planning all the government to citizen services on the blockchain, even the court cases, etc., so that people are able to access them without any tamper. See, cross-border payment is a very interesting thing. How it happens today is it takes typically between 2 to 4 days and is costly. And how it happens is, supposing I'm making a transfer today to, say, a person in America. It will deduct the money from my account. While it is doing the deduction, it will hold all the other transactions, because if too many transactions come in, supposing I got 100,000 in my account, if 90,000 records come in, if all three of them get same process without a queue, what will happen is all three transactions will go through. But typically what they do is in Swift, what they do is they will hold the other transaction, the first transaction, the queuing system, the first one transaction will go through. That will pass the payment for 90,000. For example, that is the amount I am transferring out of my 100,000. It will hold other transaction. Once the 90,000 is done, remaining amount is 10,000. When the next transaction comes in, the next transfer of mine, transfer request, it knows it has already gone down to 10,000. It will not allow the transaction to go through. So electronically, when you're done, there are a lot of challenges like this. Swift, that's why Swift, it will ensure that the first transaction goes through and it is successful, and only then the next transaction will be carried forward. So Swift by itself is a very cumbersome system, though it is a great improvement on the old system. Still, people want higher turnaround times, faster turnaround times, and quicker results. So it can be instantaneous, provided you're able to do it through the blockchain, so that you have certain cryptocurrency, you're assigning it to somebody, everybody approves the transaction gets carried out, and that block is done, right? That block is chained. And when the next transaction comes in, they know your account is already debited. So it all happens so fast through a consensus mechanism that you don't have to do it like Swift. It is done in a much different, much more elegant algorithm-based manner. So it can be done over a matter of few seconds, even the cross-border payments. Ripple is one of the popular solutions for bank-to-bank or peer-to-peer money transfers. So all the costs are decided a priori. You don't have to worry about what is the rate today, what is the rate when the currency goes to the receiver, when it gets transferred in the local currency, whether there is what is the loss. Here, everything is done frozen beforehand when the money is transferred. So there is instantaneous, so there is no risk, downward risk. Settlement risk is totally eliminated. Corporate bonds, I already talked about, can reduce the level of overhead very significantly. Today, this is a very massive settlement. There are big companies which are doing, settlement. The cost of settlement itself is of the order of 1.5%. All this can be tackled very cost effectively using blockchain technology. The cost of transaction can be as low as 0.1%. And it's more accurate, much more ownership can be very clearly defined. And it can be, there's one bond called ITAP, as I told you. It manages the entire life cycle of the bond using blockchain technology. Who originally bought it, who transferred it to whom. The entire blockchain, the transaction is monitored through the blockchain. Similarly, the shipping, who sent it, which guy, it was in which container freight station, it was loaded onto which container, which ship, when it was delivered at which port, from there where it moved. All that is also used, tracked using blockchain. In logistics, it has got tremendous applications. Similarly, Walmart goods, from farm to fork, we can track using blockchain. In which farm it was produced, what are the practices used in the farm, when it was harvested, and which batch of noodles or whatever you produce from those raw material, when it was processed, which batch number, where it was sent, where the particular batch was sent, and from there where it got distributed, which all stores. End to end, you can do the tracking. If there is a problem, you can go back and see whether it was a problem in the production or in the farm level, there was a problem in terms of chemical sprays or whatever. All that you can completely track using blockchain, end-to-end tracking. So the prime advantages are it reduces time, it reduces all the distrust, and when it's done electronically, there is no distrust. There's a certainty, legal certainty about it, and privacy is maintained, and all the optimizations which come out of it, and it drastically reduces the cost and the risk associated, right? These are some of the collateral management which I was talking about, whether whom to mortgage, all the collaterals, who are the counterparties, so that you don't give the same collateral to multiple people. In mainly in some of the smart towns in Tamil Nadu, like Tirupur, Namakkal and all that, would have seen the person who would have given the same collateral to multiple banks. They'll have one entrance on the front door, one entrance on the back door, and they would have done multiple collaterals. All that can be avoided when you use the blockchain. You look at the asset and you will know that it has already been mortgaged. These are some of the platforms in trade finance, Marco Polo networks. This is very popular. Many banks are using it where, trade finance, that is, we call it bill discounting. Supposing I'm I've supplied some goods to, say, Lawson and Toubro, and Lawson and Toubro has to pay me. Typically, the time for payment is, say, 15 days or 30 days. 30 days, hence Lawson and Toubro will have to pay me for the goods received, say X amount of rupees. Today, I can get it discounted. It's called trade finance. So now, what they do is, the fact that I have supplied the goods, the fact that L&T has accepted the goods, the fact that L&T is agreed to pay me 30 days hence that amount, all that information in an immutable, trusted way is available for the finance company. And they know in 30 days from now, I'll be receiving money from L&T. So with confidence, they can lend to me when they lend against the collateral. It's called bill discounting, right? So trade finance, it helps the small and medium companies to maintain their cash flows and improve upon, so that the trading velocity can improve further. So this is another funding platform I was talking about. Funding agency and corporates seeking funds, and whether the funds are used rightly or whether the promoters have taken the money and run away, like Nirav Modi. All that can be tracked using strategic expertise. so that companies, the lender is also safe, the company is also, the governance is maintained, and money is put to use for the purpose for which it was borrowed, and regulatory compliances are carried out. All this can be done using blockchain in a much more elegant manner. So information exchange, this is one of the things that our company is also working on. Typically, the information exchange, how it happens, from the project management module. All this can be monitored, milestone based, and KRA, KPI, what key result areas, key performance indicators, whether the project is going as scheduled, whether the compliance are being done properly. All that can be monitored using blockchain. Sorry, for paucity of time, I got to run through it quickly, because the last 10 minutes I want to use it for question and answer. So what exactly is the benefits of such a funding process solution? Trusted and transparent view of all transactions, so that promoter doesn't take away the money and run away, or he doesn't transfer it to this account. So it monitors where the money is going, whether it is going into, I am the promoter, I take the money and I transfer it to my own account. It will tell you there's a circular transaction, I have been taking the money. So the person who has funded will be aware. So digitizing the process leads to significant reduction in transaction processing, etc. Faster reconciliation. So all these, KRA, KPIs, trusted information flow. So deliverables can be monitored, whether the company is on the right track, whether they're able to meet the commitments or the projections which they're given, whether there is any financial irregularity. All that can be monitored using blockchain. What are the challenges and limitations of blockchain? While I talked about all the good things about blockchain, once the data is added, it cannot be removed. So when there is a continuous, change of data, updating, deleting, etc., which is a regular occurrence, then this is not a good fit, because it will lead to unnecessary overhead on transactions, right? So immutability is good, but at the same time, when the mutation is of a very high order, then this is not a good fit. Energy consumption and scalability are supposedly very high in a blockchain environment, as I told you, but that's only in the case of mining. And today the technologies are evolving where these problems are being overcome. Then cultural adoption, because it's an ecosystem. It's not one person, one company's system. It is multiple people coming together. It's a cooperative approach, so that it needs to be an ecosystem where all the people come together and agree that we will have this kind of a system, right? Higher short-term costs associated. Of course, as I told you, initially the technology costs are high, but they are coming down fast, and it uses quite a bit of resources. So it is not useful for small data. It's not designed for small data. If data storage is a hybrid solution, maybe a combination of cloud plus on-premise model is being worked out, so that you are able to optimize the transactions which hit the blockchain, right? Similarly, tracking tools and dies is another solution which you have done. Who supplied the tool? What were the components? How many components the vendor said the tool will be able to produce during its lifetime? How many components it produced and on which machine? Whether the quality of the products produced were okay because of the tool, are there any rejections? Whether the tool and die was able to meet the commitments which was given by the promoter. All this by the supplier, all this can be tracked. This we have given it to one of the battery companies in India. This uses blockchain technology, which is Hyperledger Fabric, right? So I hope you've got a decent, quick overview of what blockchain technology is all about. To sum it up nicely, you create all the transactions into blocks, encrypted blocks, chain them together, and then distribute it across all the multiple stakeholders who are involved, so that they all have the data, copy of the data. And the data, no individual person can go and change it. So it becomes trusted for all the people in the system. And there is the element called smart contract, which is a contract based on what is agreed upon. If the condition A occurs, the action B should be triggered. These kind of conditions can be triggered using smart contracts, which can be written on top of the blockchain, so that there is an automatic triggering of action which can be done. So these are some of the advantages of blockchain and why blockchain is gaining currency in financial, manufacturing, logistics, and government to citizen services. So with this, I conclude, and I'll invite questions, quick questions.
Thank you, sir. It truly was an enlightening session. Thank you for letting us know the reason behind the booming popularity of blockchain, cryptocurrency, and Bitcoin. The session is now open for questions. Thank you, sir. We have come to the end of the session. I thank our faculty members for their cooperation and presence. As a token of love and gratitude, we would like to honor our chief guest, Dr. Raghavendra Prasad, with a virtual felicitation.
Thank you. Thanks so much. All the best. Thank you.
Sir, I have one question from my end.
Yeah.
So what will be the future for these students, especially previously we see a lot of change completely getting into technology oriented. So if you take our undergraduate students especially, what are the extra miles that they have to do at college level, to raise up to this technology?
See, technology is one thing, but it's the use case that is important. What kind of use cases, business use cases that we can come up with? For example, whether it is vendor payment related stuff or whether it is managing your assets. These kind of use cases can only people who are the business orientation can come up with the use cases for usage of technology. Technology by itself doesn't mean anything, right? Technology is useful only when you put it to an appropriate usage. That use case needs to come from the business users, which is what all our students are going to be. So, you think what the problem currently is being faced, how this technology, understand the basics of technology, how we can address any particular solution.
Can you suggest any few kind of not exactly courses, areas like which these students, especially who's into finance, that they can do to keep them very competitive when they get into the corporate, or what will be your expectations looking at your profile when you interview a candidate who's entering for an intern or a
if you understand the basics of the blockchain technology, that is more than enough. There are quite a lot of free material which is available on the internet. We also have certain course material which we give. So I can share it with you. You can share it with the students, which can be very useful for them. I'll share the link with Professor Charulata so that she can. I have her number. Maybe she can share it with all the people. It will be very useful. They can go and read up themselves, because finally it's all about use cases, right? And there's one question from Tridisha. Valuation of cryptocurrencies. See, as I told you, the valuation is not any sovereign-backed currency. So the valuation is based on the demand and supply amongst the players within that network. So it is not a real value. So don't get taken in by all this cryptocurrency and investment in cryptocurrency. It's not regulated. It is not realistic. It is not sovereign-based. So please don't even get into cryptocurrency. There are too many people who are saying, we provide you avenues for investing in cryptocurrency and all that. Don't get taken in. Never do that.
Okay. Take it over.
Thank you, sir.
Thank you.